Welcome to the deep dive. We often talk about the historically futuristic here, and today we're diving into a company that really fits that bill, though maybe, operating a bit behind the scenes. Inox India Ltd, global leaders in cryogenic solutions, basically super cold tech, really crucial stuff for, well, everything from industrial gas to clean energy. So this deep dive, we're taking a close look at their Q1 FY26 results. That's the period up to June 30th, 2025.
Exactly. And our mission today, well, it's not just about running through the numbers, is that we want to really extract the important insights. Look at their financial reports, sure, but also recent announcements. See the strategic moves, the market trends driving things, and explore what these results mean, for their different operations. And yeah, for you, if you're keen on understanding these key industries, clean energy, high purity applications, that sort of thing.
Right. Think of it as your shortcut to getting genuinely informed about a company that's, well, right at the forefront of cryo innovation, and probably some surprising facts along the way, too. Okay, so let's jump right in. Inox India's Q1 FY26. What were the sort of headline numbers, the key things that jumped out first?
Well, the top line figures, they immediately signal a really strong start to the year.
Mhm.
Total revenue for Q1 FY26, it landed at 352 crore. For context, that's about 3.5 billion rupees, maybe 42 million US dollars. And importantly, that's a solid 16.7% growth year on year compared to Q1 last fiscal year.
Okay, 16.7% revenue growth. Pretty robust.
It is. And then on profitability, EBITDA, that's earnings before interest, taxes, depreciation, amortization, that rose 19.4% year on year, hit euro 89 crore. And profit after tax, PT, that climbed 18.9% year on year, reaching 61 crore. So really impressive increases across the board.
That definitely sounds robust year on year, but what about the quality of that growth? How do the margins look? Does this signal, consistent profit growth?
That's a really good question. Margins tell you a lot, don't they, about efficiency. And actually, the EBITDA margin for Q1 FY26, it improved slightly, came in at 25.1%, up from 24.5% in Q1 of FY25. The PAT margin, too, saw a little uptick, 17.3% compared to 17.0% year on year.
Ah, okay, so improving slightly.
Yes. And just a context, if you look at the full fiscal year 2025, the EBITDA margin was 24.4%, PT was 16.5%.
Yeah.
So these Q1 numbers, they don't just show continued strength, they actually show a slight improvement over what was already a solid performance last year. Suggest they're managing costs effectively even while growing.
Interesting. So not just a one-off boost then. It seems like they're building on a pretty solid operational foundation, which begs the question, where's this strong performance actually coming from? What's fueling it?
Well, a really significant driver has been exports. Export revenue made up, get this, 56% of total revenues in Q1 FY26, reached 198 crore. That really underlines the strong international demand and their global footprint. They've got operations in India, Brazil, Europe, serving over 100 countries.
56% from exports. Wow.
Yeah.
That's huge. Does that introduce maybe specific risks? Currency, geopolitics? Or is it more just a sign of their diversified reach?
I'd lean towards the latter. It's more a testament to their diversification, the global demand. It actually helps mitigate some risks.
Okay.
And looking beyond current sales, what's really driving future potential is their order book. It's burgeoning. They pulled in new orders worth 415 crore just in Q1. That pushed their total order book up to a really significant euro 1457 crore. That's a very strong indicator, market confidence, future revenue locked in.
Right. Over 1,400 crore in the pipeline. That's substantial.
Exactly. Now, if we break it down by their operational segments, you can see how diversified this growth really is. First, industrial gases. That was about 48% of Q1 revenue. Big news this quarter. They launched India's first ultra-high purity UHP ammonia iso tank container.
UHP ammonia, that rings a bell for semiconductors, right?
Precisely. It's critical for strengthening supply chains for semiconductors and also the solar sector. Very strategic move. They also bagged an order for a pioneering co-Euro battery project. Think long-duration energy storage, another future-facing tech. Oh, and they kept getting disposable cylinder orders from the U.S., which is impressive given the higher tariffs there.
Okay, so industrial gases is strong and pushing into new high-tech areas. What else?
Then there's LNG. That brought in 29% of Q1 revenue. Saw really robust order flow here, especially supplying a large number of fuel tanks to major Indian OEMs. It really highlights their focus on the LNG mobility space. They're actually expanding capacity for this, held by, favorable policies promoting cleaner fuels.
Makes sense. LNG as a transition fuel, especially for transport.
Exactly. Then their cryo-scientific division. This had a major win. They'd already successfully completed the vacuum vessel thermal shield for ITER.
ITER, that's the huge International Fusion Energy Project.
That's the one. The International Thermonuclear Experimental Reactor. So following that success, they've now secured a really prestigious new order from ITER for the refurbishment of the cryostat thermal shield. It's valued around 145 crore. This isn't just another contract. It really deepens their long-term involvement in global fusion energy. And importantly, they're doing like 90% of the fabrication in-house. Shows their capability in this cutting-edge field.
Wow, ITER. That's serious stuff. Long-term, high-tech. Okay, what else?
And finally, the keg division maybe seems less high-tech, but it's seeing renewed interest. They got significant audit approvals from huge global brewers, think Heineken,
The second biggest in the world?
yep, and Bev, plus 2 Brazilian breweries. And they also got a large order from a German company. So it signals real growth and strengthening relationships in that segment too.
Okay, so when you list it all out, industrial gases, LNG, cryoscientific with ITER, even kegs, it's not just diversified. It feels like a very deliberate focus on future industries. Clean energy, advanced manufacturing, they're really building foundational pieces.
Absolutely. They're not just reacting, they're actively enabling these sectors. And connecting back to the financials, it's worth noting they managed this growth, maintained, and even slightly improved margins. Even though raw material costs and employee benefit expenses did increase as a percentage of total income year on year. So that points to pretty effective cost control across all these varied divisions.
Right, holding the line on margins despite cost pressures. Good sign. Now, I noticed something in the documents about segment reporting. It seemed a bit nuanced. Can you clarify that?
Ah, yes. That's an important distinction to make. From a strict accounting standpoint, Inox India reports having, quote, only one reportable business segment, which basically covers all cryogenic tanks, disposable cylinders, related products. It's very broad. However, operationally, as we've just discussed, they clearly manage the business through these distinct divisions: industrial gases, LNG, cryoscientific, kegs. And this operational breakdown gives us a much clearer, more granular view of their strategy, where they're investing, what's actually driving performance. So it's really about how they run the business versus how they report it for, regulatory purposes.
Got it. So the operational view is more insightful for understanding the strategy. Were there any other sort of minor financial points or operational notes worth mentioning quickly?
Yes, there was one small administrative item. The company acknowledged they paid a fine, about 52,000 euro, to the BSE, the stock exchange. It was for a non-compliance related to filing an annual secretarial report in a specific format, XBRL. They confirmed the issue was already resolved, payment made. So really a minor administrative thing, not a material financial concern at all.
Okay, good to clear that up, just an administrative detail. So finally then, what was the overall tone for management, their outlook for the rest of FY26? Are they feeling confident?
Oh, very much so. The CEO, Deepak Acharya, his commentary was quite positive. He said FY26 started on a strong note, highlighted the robust order inflows across all divisions, expressed clear confidence in sustaining growth throughout the fiscal year. He pointed to the diversified portfolio, naturally, and strong market tailwinds. And he specifically emphasized their commitment to the LNG mobility space, mentioning the capacity expansion plans there again. Sees big opportunity.
Right.
And their long-term vision, as he put it, is aiming to be, quote, the world's best integrated cryogenic solutions enterprise with a leadership position across products and markets. So, quite ambitious.
Ambitious, but based on these results, perhaps achievable. Okay, so we've taken quite the deep dive into Inox India's Q1 FY26. As we wrap up, what really stands out to you?
What's fascinating, I think, is how these Q1 results show more than just strong financials, the export growth, the big order book. It really shows how they're actively positioning themselves. They're becoming this critical enabler for clean energy, for advanced industrial applications globally. They're providing foundational technology.
Yeah, foundational is a good word for it. Which brings us to a final question for you, our listener. Given Inox India's deep involvement in these foundational technologies for the future. Think UHP ammonia for semiconductors, large-scale fusion energy like ITER, the whole expanding LNG mobility sector. How might their seemingly niche cryogenic solutions actually become even more central to the global economy, especially as we push towards cleaner energy and more specialized industrial supply chains? And maybe what unexpected ripple effects could their innovations have on everyday life, things we don't normally think about? Something to mull over. Think about that until our next deep dive.